Bitcoin's sitting right on the one line that decides its next big move, and almost nobody's watching it. Today, that line gets tested. Bitcoin Whale, I'm Chris. Let me show you exactly what the chart is telling me today. First recap. Yesterday, I flagged the bear trigger at 63,539. Bitcoin closed at 63,058. That level is now broken. The bearish scenario is officially live. I'll put today's updated target on the chart in just a second. And yesterday's trade stopped out, down 1.1R, call it 1.1% off the book. You log it, you move on. Small, controlled. That's the only way you're still in the game next month. On the 4-hour, the past few days have carved out what looks like a symmetrical triangle. And I'm going to trace it line by line so you can see the full case the same way I do. Half of crypto Twitter is already positioned and hunting for confirmation. Long and looking for reasons to be bullish. Short and looking for reasons to be bearish. That's not analysis. That's managing emotion. We read the chart. That's it. First line, the ceiling. Descending resistance. I'm anchoring at the cycle peak. That's around 82,479, then dragging down to the most recent lower high. Watch where this line settles. A line only earns respect if price has actually honored it. Look at this one. It's been tested more than 5 times, and every single time sellers stepped right in. I'm marking the clearest rejections right here on the chart now, so you can see exactly how many times it held. Projected to today, that line lands at around 65,598. That's the number. Bulls need a real 4-hour close above 65,598. Not a wick, a close. That's the trigger. If these levels are giving you something useful, do me a favor and hit subscribe. I break down Bitcoin like this every single day. Now let's drop to the 1-hour. The 4-hour gives you the structure. The 1-hour is where the actual entry lives. On the 1-hour, the recent range stretches from about 60,755 at the bottom all the way up to 67,292 at the top. That's roughly 10% wide. And right now, we're sitting near the lower edge of it. Short-term momentum averages. EMA 20 is at 63,826. EMA 50 is at 64,254, and price is trading below both. On the 1-hour, that's straightforwardly bearish. Immediate momentum is pointing down. Let's head back up to the 4-hour and finish building out the rest of the structure. Second line, the floor. Ascending support. I'm anchoring on the swing low at 59,130 and pulling it up to the most recent higher low. Here it comes in. This floor has held more than 5 times. Every flush got bought right back up. It's projecting to about 62,513 right now. Above that level, the bullish structure stays intact. 2 trend lines alone don't give you the full picture. The edge comes from stacking methods on top of each other. You can see the Fibonacci retracement layered over the same swing right there on the chart. Here's why that matters. At 62,513, multiple levels compress into the same tight zone. The trend line, the Fibonacci level, all stacking. At the confluence zone, not a single clean line. When several different methods all point at the same spot. Everyone sees it. Funds, retail, the algos. I'm dropping a horizontal right through it now, so the zone is easy to track. So what does the full picture say? The pattern measures out at $15,764 peak to trough, and when these structures break, price tends to cover that full distance. That's the structural target, the bigger picture swing move. I'll get into a tighter intraday setup in a moment, but this is where the measured move points. And the historical data here is worth a second. I've tracked this pattern, 50, 60 setups. Directionally, it's basically a coin flip, but the completion rate, once it triggers, about 70% of the time, price goes the full distance. So the direction's uncertain. But if you wait for the confirmed trigger, the size of the move is real money. 3 scenarios. Scenario 1. Bulls push a 4-hour close above 65,598. That's the break. If that candle prints, my target is 81,363. That's where I'd be scaling out. Scenario 2. Bears get a 4-hour close below 62,513. Flip the math. Target drops to 46,749. Stop sits just above the broken level. Keep size controlled. Scenario 3. And honestly, this is probably the most likely one. Neither trigger fires. Price just keeps compressing, back and forth, going nowhere. If that's what happens, you do nothing. Sit on your hands. When the market's coiling like this, patience isn't passive, it's the position. That's the full map. One path up, one path down, and a lot of sideways in between. 3 levels. 3 reactions. The chart picks the winner, not me. You're responding to a trigger instead of front-running a guess. Here's where I'm actually putting money. Long setup. I'm on the 1 hour now, drawing in the exact entry, stop, and target. Not buying up here. I want to pull back into the 63,000 level. That's the entry. Stop at 62,370. Just below it, price takes that out and I'm done. I step aside. Target sits at 64,890. Risk reward comes in at about 3.0 to 1. And I don't force it. If the reward isn't clearly bigger than the risk, I pass. Simple as that. This only triggers on a confirmed close, not a wick poking through. Size it at 1% of your account, not your whole stack. If this gave you a cleaner read on the chart today, tap the like button. It genuinely helps the channel, and it tells me to keep making these. That's how I'm trading Bitcoin today. Manage your risk. Keep your head clear. Talk soon.